So India's airlines are at this really interesting crossroads. On one hand, you've got passenger numbers that are just soaring. But on the other, there's some serious financial headwinds gathering. We're going to break down what's really happening using insights from a new JP Morgan report to figure out what's next for one of the world's fastest-growing aviation markets.
And this is the big question, right? Demand for travel is booming, which is great news. But there are these powerful economic forces bubbling under the surface that could seriously threaten the whole industry. Let's take a look at the delicate balance they're trying to pull off.
To really get what's going on, you have to understand this delicate balance between a huge travel recovery and some pretty powerful financial headwinds. It's like a classic tug of war, and honestly, the outcome is far from certain.
You know, this one sentence from the JP Morgan report, it pretty much tells you the whole story. Forex and fuel could offset the modest recovery in demand. Forex, foreign exchange rates, and fuel, those are the two big villains here. In other words, even if more people are flying, these rising costs could just poof, wipe out all the gains. Let's break down both sides of this, starting with the good news.
All right, first, let's talk about the positives, because the travel rebound is actually pretty impressive. After things were a bit slow for a while, passenger numbers are climbing again, showing a really strong recovery.
So you can see right here, the number of people flying inside India has definitely turned a corner. The report shows domestic traffic saw a healthy 4% year-over-year growth in the third quarter of fiscal year 2026. But that's just the domestic side. The international market, well, that tells an even more exciting story.
And yeah, the story gets way better when we look at international travel. The growth here isn't just healthy, it's robust. This has become a huge bright spot for the airlines and really a key driver of their entire recovery.
8%. Just let that sink in for a second. That's the steady year-over-year growth rate we're seeing for international flights. This tells you the demand for travel from India to the rest of the world isn't just a blip, it's powerful and it's sustained.
Okay, so while the overall growth looks great, we gotta dig a little deeper, because what's happening in Indian aviation is really a tale of two completely different markets, domestic and international. And understanding that difference is absolutely key to figuring out what's really going on.
And this is where the story gets really interesting. Take a look. On one hand, domestic ticket prices, they've been basically flat. But, and you've probably felt this if you've flown overseas lately, international fares are exploding. We're talking double-digit growth here.
So why the huge difference? Well, the domestic market is just super competitive, right? A lot of airlines fighting for your business, which keeps a lid on prices. But internationally, that's where the airlines are actually making their money, thanks to red-hot demand and much, much higher fares.
Okay, but just as this recovery is really taking off, a couple of major storm clouds start rolling in. And this brings us to, well, the bad news. The challenges that are threatening to mess this whole thing up.
Challenge number one, and this is the big one for any airline, the cost of fuel. Jet fuel prices have been creeping up and up, a 6% jump in just the last quarter alone. That hits an airline's bottom line, hard and fast. And then there's problem number two, a weaker currency. The Indian rupee has been losing ground against the US dollar. Now, why does that matter? Well, because the big-ticket items for airlines, like fuel, aircraft parts, plane leases, they're all paid for in dollars. So everything just got more expensive overnight.
So you can see how this creates this perfect storm, a real double whammy. Airlines are paying more for their fuel, and they're paying for it with a currency that's worth less. It's a brutal combination that squeezes profits no matter how many seats they sell.
So what does this all mean for an airline's bottom line? Let's get specific and zoom in on the financial impact for India's largest carrier, Indigo, which the report really dives into.
This is where it gets a little scary. The JP Morgan analysis shows just how razor-thin the margins are. Get this, just a 1% drop in the rupee's value, just 1%, can slash an airline's profit by 5 to 6%. That is a huge hit from such a tiny change.
And this brings us right to the core of the problem. Even with more people flying and even with those higher international fares, all that extra revenue, well, it just might not be enough to cover these skyrocketing costs. The financial math is getting really, really tight. And that leaves us with the million-dollar question for the future of Indian aviation. Can that amazing boom in international travel be strong enough to power through these economic storms at home? It's a high-stakes balancing act, for sure, and everyone, from investors to the airlines to us, the travelers, is going to be watching very closely to see what happens next.